All right, welcome back. Two bullish calls on two financials today. Ray J upgrading Charles Schwab to outperform. Wells Fargo's Mike Mayo reiterating JP Morgan as overweight. All right, reiterated. We know he likes that. Goliath is winning. That's what Mayo always says about the big banks. Let's do Schwab, though, okay? Upgraded to outperform from market perform at Raymond James. Jenny, you own this, right? Price target to 63. That's in your 30% upside from here. A stock that's been in the regional bank mess crosshairs. Fair to say.
Yep.
What about it from here?
Well, it's pretty spectacular. And what the regional bank's losses are is Schwab's gains. Schwab currently manages $7.63 trillion of client assets, and they added $13.5 billion just in April. Year over year, their assets are up 5%. So going back to is it bad to buy it because it's up 36%? You could ask the question, was it bad to buy Schwab because it was down 50%? You start from today, and what you see is a company that is incredibly stable. The flow of funds into money markets has slowed. They're trading at 12 times earnings versus their historical average of a high teens, low 20s. It's just a great company. Earnings 24 should grow in the 20% range.
So you both own, Rob and Joe own JPM, right? I mean, the call's less interesting to me, no disrespect to Mayo, but I mean, reiterating an overweight, we know, we get it, he likes it. But what about the banks here, broadly speaking?
I still don't think you have enough clarity to step into ownership of regional banks. I think you want to stay up in quality, which leads you to Bank of America and JP Morgan. If you want to look at a super regional, maybe you could turn your attention to PNC or USB. But I think overall you need that clarity before you could assert you're going to take a position.
Robbie, real quick.
One of my year-end stock picks, but I definitely think we've seen peak net interest margin spreads for a while. I think there's a risk of economic activity slowing, loan growth slowing. I think those are headwinds, but we think JP Morgan, this is an economic storm. This is the name that you want to own in this storm in financials. It's cheap relative to its history at 1.4 times book versus average 1.5.